We now have more guests joining us to decode the monetary policy announcements that were made by the governor. We have Decodes Bhattacharya, the president and CIO of Equities Edelweiss Mutual Fund, also Gaurav Sengupta, the chief economist at IDFC First Bank, and Subhadeep Rakshit, the chief economist at Kotak Institutional Equities. Let me come to you, Mr. Rakshit. Your first thoughts on the announcements that were made by the governor today, and are you anticipating more? Were you anticipating and expecting more from the governor in terms of GDP growth for the country, or perhaps even for the rupee for that matter?
Well, I think what we were expecting was a 25 bips rate cut and nothing beyond that. And I think in that perspective, or the RBI policy has been in line with what we were expecting. Having said that, I think the governor has been articulate in outlining whatever the markets were concerned about, whether it was on regulatory decisions, whether it was with regards to the inflation targeting framework, and as well as the liquidity and the rupee. I mean, it's important to note that all the aspects have been touched upon. Of course, not necessarily on the policy day do all kinds of decisions have to be made. It's only articulating the Monetary Policy Committee's decisions, which is with regards to the policy rate. The RBI at a later date can come up with additional liquidity measures if required. It was also important to hear what the governor talked about in terms of the interbank liquidity and the overall system liquidity in that context. My sense is that we continue to expect a few more rate cuts. We expect another 50 bips of rate cuts possible over the next few months. And that would take us closer to a neutral rate and kind of when we look at the balance in terms of the inflation and the growth trajectories. I think that another 50 basis point of rate cut should be on the cards.
Let me take that point across to Ms. Gaurav Sengupta. Ms. Gaurav Sengupta, do you anticipate more rate cuts? Do you think there is room for the governor to go for further reduction in rates? Would you agree with what Mr. Rakshit was saying?
I completely agreed. We do need further rate cuts. Today's policy was basically a shift in focus towards growth, but I would say he took a very neutral tone, given the fact that we have a lot of uncertainty both on the external and domestic front. But clear start of the rate cut cycle, but it's going to be a shallow one in our expectation, because we also have to balance the fact with what's happening externally with the depreciation pressures in the INR. And the depreciation pressures in the INR are not going to go away anytime soon, because it's more a story of capital inflows into emerging markets slowing down with the dollar strength, which may not change given the fact the uncertainty under President Trump. But yes, we do expect a few more rate cuts in this cycle from RBI, because domestically we are seeing some moderation in growth. Both consumption is showing a little bit of slowdown, urban consumption. The capex cycle, the support that we used to get from the government of India, that has also reduced a little bit. But overall, we are seeing limited downside risk to their assessment of GDP of 6.7. We are a little lower at 6.5. But more important than rate cuts is the durable liquidity infusion. So we were a little disappointed that no more measures were announced in the policy, but completely agree. We expect them to continue doing bond purchases as well as buy-sell swaps. But they will need to do a substantial amount. In our assessment, RBI will need to infuse around 3 trillion rupees of durable liquidity in this year to ensure that there is transmission of the rate cuts.
Right, point taken, Gaura. On that note, actually, we'll slip into a break. Mr. Bhattacharya, I'll come back to you right after the break, because I want to understand your views given the fact that this week has been a bumper one, because you heard this word cut a couple of times. First you had the tax cut, now you have the rate cut coming in. I want your view, but after the short break. Welcome back on a special coverage on the Monetary Policy Committee. We have the first rate cut come in since 2020. Yes, you had the markets reacting to that initially, We have our experts joining us. Now we also have Kaustav Gupta of Aditya Birla Sun Life AMC. Along with that, we have Mr. Sridev Bhattacharya, we have Sudeep Rakshit, as well as Gaura Sen Gupta. And Mr. Bhattacharya, like I said just before hitting the break, I'll come next to you. I wanted to understand your views, given the fact that this week has been a week of surprise for most of us, given the fact that we heard first in the budget tax cut. Post-budget today, we are hearing about a repo rate cut. On that front, it is the consumers who benefit, and hopefully that benefit will trickle down to your industry as well.
So I think if I were to summarize what the RBI, what the central bank has done, it's policy continuity, growth positive, sensible, but not enough. So, and if I look at, let's say, 10-year bond yield post this movement, which is what we look at as the net outcome of what they have done, it has gone up by about 4 basis points. So that tells you the market reaction, that it is sensible, but not enough. Sensible in the sense that clearly kind of rate cut is in the step in the right direction. Not enough because I think first they need to address the tight liquidity conditions before they expect the transmission mechanism to get to the actual economy on the higher side. And if that were to happen, only then the rate cuts would actually kind of continue to pass on over a period of time. But having said that, new governor, we realize that Honorable Finance Minister is meeting the US counterparts in about a week or two from now. So some important meetings are there. Currency also needs to be thought in the context. So I think the next policy meeting needs to be watched out. But I think we would at least look to see a more dovish sort of an outlook rather than a neutral stance, which will probably help the markets and get some animal spirits back into the markets. So this is in line, sensible, but probably more is desired.
True. Kaustav, I'll come to you actually. And if you actually do a side-by-side comparison, the way how Mr. Das's last speech was in the month of December and Mr. Malhotra's now in February, if you look at it, there's significant change in the language, in the text, because the way how Mr. Malhotra sounded about the global economy was not that enthusing, while on the other hand, you had Mr. Das' flag of inflation risk. What's your assessment?
All policy measures need to be forward-looking, and clearly of the data that we have seen, incoming data, it gives us a great confidence that incoming data, at least for next 12 months, inflation is likely to move lower very sharply, closer to 4/4 to 4/2. Yeah, it should be noted in mind that last 18 months, large part of inflation is driven by veggies. And veggies inflation, they move in cyclical terms, and which is why the new governor got a lot more comfort and confidence that inflation, which has been a problem for RBI in last 12 months, may not be a big issue, and they can focus back on growth, which is why the change in language among the two governors.
Ms. Gaura Sen Gupta, let me come to you. Were you anticipating more liquidity measures? What's your overall take on the announcements that were made with respect to liquidity conditions in the economy as of now by the governor?
I think some liquidity measures, but that said, liquidity is not, it's in with the control of liquidity is with the RBI, it's not with the MPC. The MPC has control only over the repo rate. And as in the run-up to the policy, they've already undertaken 1 trillion rupees of durable liquidity infusion via bond purchases by USD INR buy sell swaps. So we expect them to continue to do that. But given the quantum of infusion that is required, given the liquidity deficits the banking system is facing, we did expect a little more emphasis on it, though the governor did mention that RBI will provide not just transient liquidity, but also durable. So again, indicating that they will continue to undertake bond purchases, buy, sell swaps. But yes, we did expect a little more stronger statement on the liquidity, because the deficit that we are facing in the interbank market is substantial. And a large part of that is because the capital flows have actually slowed down drastically.
So, Vadev, I wanted to come to you, wanted to get your view exactly what's exactly happening in the bond market, given the fact that we did see a sharp spike in the bond yields. It saw a spike of about 5 basis points to about 6.7% when you had the governor actually give out the speech. Just wanted to understand, is it that they were expecting a change in the stance, or is it just the liquidity, lack of liquidity announcement is what has actually had the impact on the bond yields?
Yeah, I think a lot of, sorry.
No, sorry. It's yours. Yeah, Rakshit, go ahead.
Oh, just one point on that one. I think a lot of the expectations that were built in were not just from a rate cut perspective, but also from a liquidity perspective, whether it is a CRR cut or whether it is, OMO announcement, etc. So a bit of disappointment will always come through in policies where we are looking at inflection points. Now that we have the inflection points, I think the next order of business will be demands of liquidity, which Gaurav was pointing to. And I think it's gradually that the bond markets will adjust to the fact that what's the sequencing like, what are the priorities of the RBI at this point. So we'll have those kind of shifts that we will see gradually. But for this policy, I think a lot of expectations on the liquidity was there, which did not come through. And in general, if you go back to the budget. And continuing from the budget, the gross borrowing has been slightly above expectations, and that probably is also, kind of weighing down on the bond market.
All right, let me come to you, Mr. Kaustav Gupta. You are the co-head of fixed income at Aditya Birla Sun Life AMC. What, according to you, were the key takeaways, especially for your sector, from the governor's speech?
Perspective, this policy is, I think, very prudent, given that we are living in an uncertain macro backdrop. Markets got somewhat disappointed on account of keeping the stance as neutral and to some extent no incremental announcement or a promise on liquidity right away. But these are short-term moves. There are enough hints in the policy statement when he raised the word that there is a flexible embedded in the framework as far as the flexible income target, inflation target is concerned. And given that next year they are expecting inflation to be 4.2, I think if the global uncertainty is settled faster, we could see the pace of rate cuts increasing incrementally, and which is why beyond the 1 day, 2 day move, which are more on account of the market positioning, I think bond yields are heading lower.
Easing in the bond yield levels. Coming to you, actually, Mr. Bhattacharya, I wanted to understand actually and get from you a much more of a wider picture, given the fact that markets were actually hoping for this rate cut, but they are not enthused at this point in time. How do you think that this will actually help support the growth going ahead, given the fact that we've seen a substantial slowdown in the growth? You have the realty index also that has not performed well of late.
So I think the important thing in here is basically the direction. And from that perspective, the direction has clearly changed after 5 years from rate increases to rate cut. The next thing that we as equity markets participants are certainly looking at is what is the pace to the extent, whether it's liquidity or the rate cuts, or basically the cost of capital in the context of India goes down so that it acts as a stimulant for growth. At the moment, from the way, from what it has sort of, what has come through so far, I think it will need probably at least 1 or 2 more rate cuts before we can say that that would stand to happen. The reason why we are a little more circumspect is because if you look at, earnings cuts so far and the growth impact so far, if you look at India as a factory, India Inc. earnings cut has been to the tune of about 8 to 10% in fiscal year 25. That's meaningful. And that's what we are dealing with. And whatever in the form of higher liquidity or lowering cost of capital, the central bank can actually provide would also is the growth to that extent. So it is meaningful. And hence we think that it will the recovery will only happen in a bit of in a more gradual fashion rather than immediately. But I think the transmission mechanism will probably accelerate once the liquidity parameters are properly addressed. So I think it's a 3 to 6 months wait before that transmission starts to happen, before growth starts to come back. So I think a bit of patience is probably needed to get growth back on target from whatever the data that I can see.
All right. Thanks very much, sir, for sharing your thoughts with us right here on ET Now. This, remember, is a continuous coverage of the RBI MPC outcomes. Of course, we heard the governor's address just a short while back. And of course, the panel is of the opinion that there needs to be more rate cuts, gradual rate cuts, of course, for a sustained recovery of the Indian economy. On that note, thank you very much, Ms. Gaura Sen-Gupta, Subhadeep Rakshit, Tridip Bhattacharya, and Kaustav Gupta for joining us on ET Now. Ladies and gentlemen, time now for us to slip into a quick break, but lots more coming up on the other side. Don't go anywhere.